Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
Welcome to Tax Bites for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Hi everyone, welcome to this episode of Tax Bites for Expats. Every episode I start by saying how excited I am to have the guest on with us. And today is no different, but perhaps the guest is slightly different in the sense of he actually happens to be my husband, Bryan Wickham, who some of our clients would be familiar with. He works with us in the business and is a chartered accountant and very fond of everything to do with tax and accounting. But in his spare time, he moonlights as an avid car enthusiast, and he has for many, many years. So we thought it might be good to do an episode about the things to think about when bringing a car to Ireland, the things to think about when navigating the transfer of residency, and all the other things that you probably haven't thought of before you pack your car up or consider getting a car on the road in Ireland. So without further ado, Bryan, it is great to have you on the podcast. You hear it being recorded frequently, and now is your time to shine. Welcome.
Thanks for having me. It's nice to finally be here.
So I obviously know, but for those who don't, tell us, why are you so interested in cars? What do you know about cars, and what's been your experience with getting cars into the country and dealing with the tax issues that come up when somebody tries to do that?
Yeah, so I suppose we lived in Australia ourselves for 8 years, and when we decided to move back, the issue of bringing back a car, potentially bringing back a car, deciding whether it was worthwhile came up. As you've mentioned, my love is cars in the background. I've imported a few cars from Japan back down through the years. I've tangled with revenue in relation to VRT, and we've moved back from Australia. So I understand the stresses involved with the logistics there. So the reason I thought it might be helpful to talk about this subject is it's one of those things where you get a concession from revenue to bring back your own car if you've lived outside Ireland. And there's a lot of confusion out there. So I thought it would be helpful if we talk through some of the specifics and perhaps help people get some clarity and some direction on how best to approach it.
I'm going back a step because I know when we came back from Perth, so you'll remind me of the detail because I won't pretend that I had a huge amount to do with it. We employed a company to basically send a container back, wasn't that it? And you loaded a car into it in Perth.
Exactly.
Talk through that process for someone who's never done it before.
We did some quotes. We decided we were going to bring a container back. We had some furniture and some effects to bring back, and we decided that perhaps a car might be worthwhile bringing back in terms of the value of a car in Australia, tax saving with bringing it back to Ireland. And we engaged Mason Transport to help us navigate the situation and to actually handle the shipping for us. And I'd say, first of all, it was great to have Masons involved in the middle because there's a lot of stress involved with relocating. There's so many moving parts, so just having an expert in the middle was a real help to us.
How did they help? What did they do?
Well, they helped us with the paperwork initially. So there's criteria that you need to meet for the various concessions, making sure that we had the right size container, the scheduling of it. We had various options, whether we wanted to pack it ourselves, whether we wanted to get it dropped at our house. So I suppose they made it very easy for us to decide what was the best approach, and we had some very clear pricing on it. So they did a lot of the heavy lifting practically and took a lot of the headaches away from the logistics of moving home. The car was a key part of that for us.
So we had to get the car to the port, was that right? And we loaded the car into a container at the port.
Yeah, so we had bought a car in Australia, and you have to have it for 6 months for the transfer of residence. When you import a car to Ireland, ordinarily, if you're importing outside the EU, so from the UK or from Australia, for most right-hand drive countries where a lot of people listening probably are, you would have to pay 10% customs, you'd have to pay 23% VAT, and then you would have to pay upwards of perhaps 40% VRT on what revenue deemed to be the value of the car. So it can be a very, very expensive exercise to bring in a car or to import a car to Ireland. And therefore, if you can avoid those taxes, it can be a very worthwhile exercise.
How do revenue work out the value of the car?
So the VAT and the customs are based on the invoice value of the car, so what you paid for it plus the shipping. And then the VRT, that's the interesting bit. It's revenue's determination of what the local market value of the car is in Ireland. So yeah, based on previous experience, that can be a little bit unpredictable. Revenue can sometimes be punitive in their approach inadvertently. So it can be quite a stressful process even to figure out how much VRT you're going to pay, because you don't actually know until you present the car for VRT. There's no way of knowing up front. So really it's based on what revenue determined the local value to be.
So when the car lands in Dublin, is that VRT payable? What's the process? Talk us through like actually getting the car on the ground here.
Ordinarily, you would have to clear customs to pay your VAT and your customs, and then you would proceed to paying the VRT. With the transfer of residence exemption, you are exempt from those taxes. So in order to avail of that exemption, you need to have had the car for 6 months in Australia or the UK or wherever you're relocating from. You must have been a 12-month or a resident for more than 12 months yourself in that country. And then you need to provide some proof along with the forms. So proof of ownership of the car. So that's insurance, tax, MOTs in your own name, proof of residence in the country. So that could be pay slips, utility bills, employment contracts, and proof of transferring residency. So that could be sale of your home, your job resignation letter, cancelled utility contracts, job offers in Ireland, whatever you need to demonstrate that you lived abroad and now you're relocating back to Ireland. So the value there in having Damien Mason or an agent in the middle is that they can help you navigate through that paperwork to get the exemption with the minimum of hassle. That's where they add value into the process.
And do you get the exemption when do you need to have that to drive the car home from Dublin, or is that something that you need to have what's the time frame? Can you access your car before you've provided that paperwork?
That can be a bit of a grey area as to whether you can drive the car straight from the port. Technically, the car is not registered in Ireland, so you'll need to arrange insurance, and insurance itself can be a sticky subject with imported cars. Generally, a lot of insurers will need you to have a car registered in Ireland or have Irish plates on the car to drive it on the roads. With the right broker, you might be able to insure the car temporarily on the chassis number while you're waiting VRT and waiting registration. So
okay,
the importance of having a good insurance broker in the middle and having some planning done can't be understated here, because I've heard stories before of people who've arrived in Ireland as you've described there, and they can't actually drive the car. They need to get it towed home. They need to get it towed to the VRT centre. It can be a very
expensive,
inconvenient and expensive exercise if it doesn't go according to plan. So
once it clears the port and you can drive it home, what happens after that?
Once you have your transfer of residence approval through your customs agent, then you can proceed to the VRT office, and that has to be done within 30 days of the car arriving in the country. So you should have your exemption notification from Revenue that allows you to register the car without those taxes we mentioned, and you proceed to book your appointment with Revenue to get the car registered in Ireland. Being able to drive the car on the road comes down to being able to obtain insurance to drive the car on the road while you're awaiting registration. In our situation, we were able to remake the Australian plates for the car, and our insurer was willing to cover the chassis number and the original registration number of the car in Australia temporarily while we got the car registered in Ireland.
Where'd you get the plates done? How does that work?
I just got them done in the local auto factors. So anywhere that can make up a set of road legal NCT plates. And we kept the documents in the car that confirmed that we had the clearance or the transfer of residence exemption. We had the appointment with revenue or with the VRT centre to get it registered. And we had no issues for, I think it ended up being about 45 days in the end, because there were some issues with getting the model on revenue system. So I suppose essentially you can take a common sense approach that once you can get insurance and you can demonstrate on the side of the road that you have coverage and that you are awaiting an appointment to get it registered, most of the time I could imagine that the guards will be understanding of the situation.
That's a concept, isn't it? Like police here in Ireland on the road, how would you compare them to Australia?
There's definitely more of an ability to have a conversation with the guard here on the side of the road versus, you look out the window of your car in Australia when you're stopped and the first thing you see is a gun.
Yeah.
So, yeah, they're pretty black and white in Australia by comparison. But I think the nice thing about Ireland is that with the police generally, with the guards, that if you're not taking the mick, they will generally be reasonable with you. That if it's a reasonable amount of time and you can explain why you're driving the car without Irish plates, we found it was okay. But
so at that point, you're driving the car with insurance because the insurer's given it to you. You don't have road tax because you can't register and pay road tax until the car is put through the registration process. So you go to the VRT centre, and what happens then when you're actually getting it? What does that mean in terms of like once that 45 day period that we had passed, what were we doing at that point?
So we were then basically presenting the car to get it registered. So we had the registration documents from Australia. We had the clearance document provided by the agent. The key thing we also needed was to prove the emissions of the car.
Okay.
So generally revenue requests a certificate of conformity. It's the document they require. And depending on where you're coming from, that can be quite a tricky document to obtain. I think in Australia, manufacturers aren't always willing to give it out. So really it comes down to the VRT centre as well that you're dealing with as to whether they demand that or whether they're willing to accept alternatives. In our case, they were willing to accept a report from, it was an Australian website called greenvehicleguide.gov that just confirms the emissions of the car.
And were we not able to get the emissions from the manufacturer for our car?
No, I don't think we could get the letter that they were requiring. But
what does it state? Does it just talk about like...
It just confirms the chassis number of the car, basically confirms the identity of the car, confirms that it complies with Australian standards in our case, and confirms the emissions. They're the three key things. But in our case, we were able to get to the same end goal using a government site. So carfax.com.au is another popular one. Green Vehicle Guide, as I mentioned, is the one we use, and that just confirmed the emissions. The emissions is probably one of the key things because that will dictate your road tax going forward. So that's probably where you need to do your homework, that you need to make sure that you're not going to get stung with a car that maybe the rego might be quite reasonable in Australia because it's based on the weight of the car, whereas the road tax in Ireland can be surprisingly high just based on the CO2 bands.
And that's an interesting point because if you have to run the car in Ireland and use it, you have to pay the car tax. So we've talked about two different types of taxes here. The first one was the VRT that we've spoken about, the exemption. And maybe just to kind of round out on that, assuming that's accepted, is there a period of time you have to keep the car for? And what happens if you don't keep the car for that period of time?
Yeah, so you have to keep the car for 12 months after it's registered in Ireland. Otherwise, there's a risk of clawback on the VRT exemption. So it's probably a little known thing that revenue do systematically or perhaps sporadically check that for transfer of ownership. So if you transfer ownership of the car within 12 months, you run the risk of revenue clawing back the VRT should they audit your case. So it's something to be mindful of, that you need to make sure you keep the car for 12 months in your own name and used only by yourself for that period.
They claw back from the person who imported it, not from the person who it's been sold to.
Correct.
Okay. So then the next type of tax that everybody in Ireland pays is motor tax, which obviously is a bit different than you might see in different countries because, in Australia, for example, it wasn't necessarily that you had to pay tax on each individual car. So talk us through kind of high level the motor tax system in Ireland. Most returning Irish are familiar with it, but it might be new for people who never lived here before.
Yeah, so the road tax system here is based on the carbon or the CO2 emissions. If the car is registered since mid 2008, it's based on that CO2 rating or CO2 band. So the cars can be quite expensive, like it can be upwards of €2,400 for annual road tax. So that's where choosing the right car to bring back from abroad is critical, because you might have a car that's quite popular. A V8 Holden in Australia might be a common garden car there, but over in Ireland it's a very limited market and a very expensive car to purchase, so or very expensive car to run. So choosing wisely what car to bring back is a key part of the value proposition with importing your car to Ireland. So suggestions there: check Done Deal to make sure that the car you're looking at or the car that you're planning to bring back, that there's a value for it in Ireland, there's a market for it, that you can find spare parts for it. Generally, there's no international warranties on cars. So if you have a car that's still in the warranty in Australia, it's unlikely you're going to have much joy claiming on the warranty in Ireland. So buying a new car is probably not critical. So even buying a car that's 2 or 3 year old might be worth a look, because you're not unlikely to have the value of the warranty in Ireland anyway. Family SUVs are usually good choices with the cars. So your Skodas, your Volkswagens, your Kias, Hyundais, they're quite popular in most right-hand drive countries where a lot of expats are coming from, and they're quite popular here in Ireland as well.
And actually, sorry, just on that point, if somebody's bringing back a left-hand drive car, does VRT apply within Europe as well?
Yes,
Okay.
VRT applies
Across the board.
across the board.
So if someone's bringing a car from the Netherlands or from Germany or from France, everything we've said applies. Can those cars get insured if someone decides to bring them back? Because I suppose the interesting thing is there'll be people listening to this who may see what you're alluding to, which is the opportunity to purchase a car before you come back. There may be a value in importing a car if you subsequently went on to sell it after you'd met the conditions. But for the people who just perhaps like their family car and want to bring it back with them and don't have the funds maybe to repurchase a car in Ireland, can they get insurance for European left-hand drive cars in Ireland?
I don't believe there's any problems there generally. There may be specific companies or brokers who may not deal with them, but I think conceptually it's not an issue.
You can drive them on the road here?
Yeah.
Okay.
It's just practically a little bit more difficult being on the wrong side.
Yeah, I'd struggle. I'd struggle. So we were talking before I went off on that tangent about the types of cars that you might bring back. Do you see a lot of cars on the road here that you can see have been brought back? Do you think this happens?
Yeah, I think if you look at some of the expat Facebook groups in particular, you see most containers that people are bringing in do seem to have a car or 2 cars in them, or even more. The key thing to remember with the transfer of residence exemption is that you're not limited to 1 car, that if you've got 2, 5, 10 qualifying cars.
Some clients have collections of vintage cars that they want to
as
bring
long
back.
as they're your personal vehicles, you can prove that if each of the vehicles qualify individually, you've had them for 6 months, you can prove that you've owned and used them in your country of origin. They do qualify. There's no restriction on the number of vehicles as long as they each individually qualify. So that's a key thing I think people sometimes get confused on is, can I just bring 1 car? No, bring 10 if you have them and you've been using them as your personal car. They all qualify on the same basis.
Yeah, and evidence there I think is quite important, being able to prove that each car meets the conditions.
Yes.
Okay, so in terms of transfer of business, if someone is bringing back a commercial vehicle, because we've spoken about, just personal use cars, what about ones that are used in businesses or business assets generally that people might be bringing back?
Yeah, I've been hearing lately that Revenue have been refusing commercial vehicles under the transfer of residence. So that would be your Hiluxes, your Rangers, your 1-ton utes generally. I think were allowed previously, but it seems Revenue may be now getting a little bit more sticky on allowing those through under the transfer of residence exemption. Your alternative there is to look at the transfer of business exemption. So if you've had a business abroad and the car was part of that business, was owned by the business and used for, it's a period of 12 months in the case of the business versus 6 months for the transfer of residence. But if you could demonstrate you've used it and you're transferring your business back to Ireland, you can get an exemption on the commercial vehicles and your other tools and equipment that were part of the business as well as part of that particular relief.
And when you say commercial vehicles, you talk about maybe like a Hilux or a Ranger. Are we looking at does it need double cab? Is there a certain specification? What's a commercial vehicle in that regard? Because to me, a Hilux is potentially a family car as much as it is a commercial vehicle.
I think that's perhaps where the grey area is now, that previously the Revenue did accept them as family cars, as passenger vehicles. Whereas now I think, and I think it does appear to be case officer specific who you're dealing with on the day. But generally, if you've got a tray on the back or it's a van of some sort, you're going to perhaps have difficulty. So it's whether it's worth the risk, because the stakes are quite high in terms of the tax. You've got your customs, your VAT, your VRT, as to whether you want to take a chance. But it seems that it's becoming more and more difficult of late to get those particular vehicles through.
And you also have your cost of transporting them here.
Yes.
So revenue aren't going to pay for you to send it back if you don't meet the conditions. So it can be a very expensive exercise if you haven't done your due diligence beforehand.
That's the value of having an agent. They should be able to tell you, based on what you're planning to bring back, what the best play is for your situation.
Yeah. So is there any concessions here? Is there any leniency? And obviously, I suppose it's probably worth saying this is not work that we do at Expat Taxes. So we're talking very much about your own personal experience. But based on what you've seen, because I know you watch the market quite a lot and you have direct experience of engaging with revenue for importation of cars, what's your observation?
I think revenue are generally quite strict with these concessions, the transfer of business and the transfer of residence. They look at the criteria and they will refuse it. I've heard of cases where they've refused it because a car, perhaps you haven't owned it for the 6 months, or you can't prove you've owned it for 6 months. So they are strict, but there is scope for leniency in there as well on a case-by-case basis. So if you can make the case that you've lost your job, you've got health issues, a family bereavement, something unforeseen that's brought you back to Ireland before you've had your car for 6 months, I think they can, on a case-by-case basis, offer concessions. I think generally there's not much point unless you've got the car for a minimum of 3 months, but if you can make a case for unforeseen force majeure circumstances, then it might be worth applying to revenue. So that would be done directly through my inquiries, as far as I know, to make your case and see if they're willing to give a concession. But generally they are quite strict. And as I said, they do check up as well on the 12-month post-arrival ownership to make sure you haven't sold the car in the meantime as well. So
how do they do that?
I think they can just access the Department of Transport records to see if the vehicle is still owned in your name while the flag is on it. So if they can see it's transferred out, that's probably going to prompt an audit or a discussion from revenue as to why that's happened.
And here, when you sell a car, isn't there that docket that you complete where you sign it over into somebody else's name and they post it off, and then that obviously updates the Department of Transport's records? That's how it's monitored. That's
now migrated to online.
That's it.
It's a major change in the last few months, so it's a little bit more straightforward. But yeah, it's basically the registration records on the government systems is what they'll be checking there.
So there's no longer that book that you used to get, the green book that you fill in, that's gone.
You still get the book, but you can do a transfer of ownership
online. Oh, that's okay. That's interesting. So one other question that comes to mind is looking at the car market in Ireland and the price of secondhand cars here. On balance, is it worth importing a car, going through all we've discussed?
Yeah, I believe it is. Brexit and things like COVID have had a major disruptive effect on the Irish car market. Secondhand car values are higher than they've probably ever been before. So importing a car, but importing the right car is a real opportunity to beat that market, really, because every car that you're buying in Ireland already has the implicit value of all those taxes built into it. So you're able to buy that car without those taxes straight away. You've got a cheaper car side by side, or a more valuable car that you can sell to the market.
And where's the best place to find realistic values of secondhand cars in Ireland?
Websites like Dundee, probably still the most popular ones. Facebook Marketplace can be worth a look as well. It gives you an idea. But I'd always generally look at Dundee. Most dealers still advertise there, so it's a good barometer of what prices are. So perhaps do a search for cars, sort by the lowest to highest, and see kind of what range you're seeing in terms of values. And yeah, check the road tax is one of the key things that drives secondhand values in Ireland. So if you can get a car that's in a reasonable tax band, and family SUVs, like we mentioned earlier on.
And actually, do you know what? That makes me think of another question. What's the situation with an NCT when you import a car? How quickly do you need to put it through the National Car Test is the acronym for NCT?
Yes, so you do have to ensure that your car is road legal. So I think, once a car is over 3 years old, don't quote me on that. I generally deal in older cars. So once your car is due an NCT based on its age, you are required to put it through. So that's a safety check and an emissions check fundamentally. So it's a roadworthiness check to make sure that the car is safe, that mechanically it's sound. So it's another heart of getting a car on the road, for sure.
And if you import a car like we did, when do you bring it for its NCT? Do you bring it as soon as it's registered, or do you get a period of time before it needs to be tested based on the age of the car?
I think it's when the car is 3 years old.
Right. So for us, for example, we had brought back a car that was
7 or 8 months old.
So we didn't put it through an NCT. Okay.
Yeah, but if you bring in a car that's, say, 5 years old, it would definitely be due an NCT. So once you've got a registration, you're obliged to get an NCT on it. Again, depending on your insurer, you may even run into issues not having cover until you have an NCT. So that comes back to the insurance situation. It's critical to do your homework there and make sure you don't get caught out with a car you can't use because of restrictions.
And especially if you've got one family car, you're relying on it to get to work. These are all things that are going to cause a lot of stress if you don't know them in advance. You know, if you get a phone call, well, you can't use that car, there is an NCT. What are the NCT wait times like at the moment? They were very slow for a period of time.
I think it's improved now. If you go on the website in the evenings, I think generally they release bookings. So I think the issues we were seeing 6 or 12 months ago have pretty much been resolved. So once you can get a booking for a week or two out, I think generally.
Yeah.
So it's just another step to be mindful of in the process of getting the car on the road legally.
Okay, so in terms of, I suppose, your learnings having navigated the process, I mean, I know you've had situations as well where you've had discussions, engagement with revenue about the values, the correct valuation of cars that are brought in. Do you ever see, and I'm going back here to the start, which is, you know, the importation of the car, we've kind of talked about everything as if everything goes smoothly. When it doesn't go smoothly, and, you know, for example, revenue don't agree, or they give a value of a car that is perhaps higher than seems reasonable to one party or the other, what options do you have? And when would that arise? What situation would that seem likely to occur in?
Well, I suppose in most cases, people listening to this are looking at the transfer of residence or looking to avoid the VRT entirely as a concession. So making sure you qualify for that before you load the container in Australia or wherever it may be is key. Appeals are not nice. If you have to engage with revenue at that level, it's not a pleasant experience. If you've failed on your transfer of residence or you otherwise need to engage with revenue to assess the value of the car for VRT, it can be quite onerous. The impetus is on the client to prove the value of the car. Revenue will assess it and it's up to you to prove based on market data that it's different. So it can be a slow, tedious process, and ultimately it can escalate all the way up to an appeal in front of the tax commissioner if you're willing to pursue it that far. So I think the messaging for this audience would be to make sure that you've got everything in place to qualify, to meet the criteria for the exemptions that we've discussed, because they are valuable. And having an agent in place helps you to cut through the noise, making sure you've got the right paperwork. You're not wasting time collecting paperwork you don't need. It takes the stress out of it. There's a lot of misinformation out there on Facebook where well-meaning people are misinterpreting perhaps what the rules are. So having somebody who understands the rules that can help you navigate through it are key to making the process smooth and making sure that you've got one less thing to worry about at this end of the journey, because there's a lot of issues to deal with relocating.
There is. And I think it's probably important to say it for the sake of anyone listening, that's not a service that we offer. And there are other people out there who we can refer listeners on to. But I suppose this episode is more about sharing our experience and the pros and cons of bringing a car back, what to be aware of. And maybe for anybody who is a car enthusiast like yourself, the opportunity to bring back something that you can enjoy for the required period of time, but to do it with your eyes open about the costs and the paperwork that you know you kind of have to troll through to get there.
Yeah, it's a great opportunity. It's just a case of making sure you navigate it and get the right help to help you get through it with the minimum of hassle.
Thank you very much for coming on the podcast.
Pleasure.
Thanks for listening to Tax Bites for Expats. Please do leave a rating or review wherever you listen to your podcast. And as always, remember to take professional tax advice specific to your personal circumstances before acting or refraining from action in connection with the matters dealt with in this series. The material in this podcast is intended to give general guidance only.